Good now, revolutionaries, and welcome to the Rise Up Morning Show.
The Rise Up Morning Show.
Today, Alex, is Wednesday, February 5th. Will is taking the morning off, and we are here for the very first occasion of Web3 101 Wednesdays. I am so excited to welcome all of you, if you are new to crypto especially, because a lot of people have given us the feedback, including my own sweet, wonderful, love of my life, betrothed bride-to-be Kim, said, you really, really need to do a day a week, at least for brand new people. And many folks gave us that feedback. And so now, as is tradition, Alex and I are getting around to it. Thank you very much.
Amen.
How do you feel about it?
Good. I have notes to go
Ooh,
through.
I knew you would.
Also, disclaimer, as I told Evan, first time using this microphone, and you have to talk into it this direction, and I'm used to, so I'll apologize ahead of time if my sound is a little wonk as I get used to this thing, but testing it out, because I think it's a little nicer, but we'll see.
I think you do sound a little crispier, and I think there's I'm sure there's a way I can get you a little audio interface or something like that. Although I do like the omnidirection. That is kind of nice when you get that.
Yeah.
So don't be afraid to give Alex a gentle poke if you can't hear him. But we're so glad you're here, Alex.
It should be good.
So
Anyway.
if you're new to cryptocurrency, this is the place for you. Let me put up the fun box and just give you some of the supportive links that we have. If at any time today throughout the show you feel like you're not following along, you're not catching up, then please let us know. We are here to help you understand the next iteration of the internet, the third evolution of the internet. But that's all cryptocurrency is. It's a new way to use the same internet you've loved, now with more bells, whistles, and features. And I want to invite you to come back and keep learning this stuff with us every Wednesday, every Monday through Thursday. We're here at 7 Central talking about the news, commentary, answering your questions. But check out the Rise Up Discord server. I'm pointing for the TikTokers, and I'm going to point for everybody else. Hang on, Facebook. It's discord.gg/riseup. If you've never joined one before, it's very easy. I've got a step-by-step tutorial at the top of my TikTok page. Alex, Will, and I are there along with many other learners from all around the world at all levels of experience. The fastest, safest, I would say cheapest way to learn about crypto is to join a free community with people who already kind of know how to use it. That's our community, and we would love to see you there. And additionally, I do want to plug the website, which is theriseupmorningshow.com. We've got all kinds of resources there that'll help you too. With that, my co-host is left. It's a sad, lonely time. I turn to the comments. Hey, Tori. So good to see you, everybody. Thank you so much for being here with us. Alex, welcome back.
Yes. Thanks.
I just finished the commercial. You're absolutely early. I see a lot of comments from folks, but go ahead.
Have so many dogs. I
Yeah, I can imagine. Any thoughts on coin?
No.
That's about the extent of my thoughts on it. Honestly, truly. Fact check yourself, brother. Lonely. Okay, so Alex, you said you had some notes prepared, and I'm glad to let us, go through notes. You can start the lecture, and we can just field questions as they come in. Yeah.
Sounds good. Yep. I think it's worth pointing out before we get into too much stuff here, just that it seems intimidating. It's very overwhelming, but it really doesn't have to be. And you don't need to be an expert in everything to get started or participate at all. It's kind of the ceiling is limitless. It's as much as you want to put in. You get out what you put in. And like I always say, you don't have to be an auto mechanic to drive your car to the grocery store. We're not trying to be Formula One drivers here. We're just trying to buy food. So,
yeah, just because you didn't know how to build the internet doesn't mean you have a hard time using Facebook.
Pretty much. So I think, it might be worth just touching on markets for a brief second and kind of what we're doing, because I know from comments and from messages already this morning that this is a tumultuous time. And if you're new and fresh, then perhaps all you've seen is a crash and you're wondering why the hell anyone is ever here.
Yeah, like I see the question, XRP is going up or down. I buy it at 271. Can I hold it or sell? I think we should make our market update very much oriented for people who are friends of the show, just coming in towards the beginner who may just be getting here. So if you have a particular question about a particular token we don't answer, don't fret, don't sweat, throw it in the Discord. But we really want to help new people acclimate, right, Alex?
That's right.
So tell me about it. What's happening in the market?
Well, we got a whole lot of red. And I kind of want to talk about why, because I think that we're in for a bit of a rude awakening. I tweeted yesterday that the attention span of crypto is about to meet the speed of Congress. And I think that today's price action is indicative of that happening sooner than later. So
I'm so late on that, but you needed it. I'm sorry.
Thank you. So let's start most recently and work our way backwards, right? So today's dip from yesterday, what is it? So it's a little bit of a compounding crash, because we had already a little bit of hesitation. We've had kind of a crash brewing, and then yesterday we had this press conference with Congress people and with David Sachs, who is the White House crypto guru, resident crypto czar. And to be honest, like, if you just took it at face value and, thought about it objectively, one, it's exactly what I expected. I don't know who would have expected anything else. The other tweet that I sent out about it in response to the fact that the market crashed as soon as he started talking and then didn't recover, even though it was what I would call pretty good news and encouraging. And again, exactly what you would expect. It was like, I don't know what you guys expected. A bunch of dusty old white men to come out from Congress and with pit vipers on and start like pumping your bags. Like this is Congress we're talking about.
I was, Alex, on the Coin Bureau live stream, and there were like 50,000 people who were watching, and it was the comments were just like XRP, XLM, say Ondo, please say Bitcoin, pump my bags.
Exactly. It's like you guys have never met Congress. And so, but I think two things can be true at the same time, as I always say. And so, one, you've got a bunch of people who are now paying attention to congressional activity for maybe the first time. This is totally ops normal for crypto. In fact, the fact that they had the press conference already is already like a deviation from the norm. Normally they probably would have liked to sit on this and ruminate for the next 6 months before they say anything. I always like to say, back in whatever year, Evan, do you remember off the top of your head, or someone in the chat help me? There was a year where Congress, famously did less than they had ever done before, and they were labeled the Do Nothing Congress. And I don't remember what year it was.
Year that was.
I'll fact check myself.
A very good year.
The point of that is that if you look at how much Congress did that year compared to this current Congress, Do Nothing was like running like rabbits. So we are truly in the era of Congress doing almost nothing. So I don't know. I thought it was good news. It seemed like they're looking at this kind of the right way, which is, hey, settle down. Don't do anything crazy. Admit that stable coins, which we can get into in a second, stable coins are good overall. They are good for the dollar. If you're a dollar fan, stable coins are good for the dollar. And in general, just get out of the way. I think that's really what I wanted more than anything out of that press conference, was like some sort of indication that Congress was going to like clear up some of the mud. I really would have preferred that there was at least one mention of the fact that crypto taxes are nightmarishly bad. And then I just want them to go away. Just get out of our way. I don't understand why right now there's this like desperate need and lust and yearning from the crypto community for the US Congress to be heavily involved in all of our bags. Like, I just want them to get the fuck out of the way. Just go away. Don't forget, we've built everything that is in this industry during hostile administrations who have not been fans of us. A favorable one should really just open the doors and then move, because we don't need them. They don't move fast enough for anything meaningful to happen anyway. So markets are crashing because David Sachs did not scream XRP and rip his shirt off and then run around the dais and kick the podium over while saying RWAs are the future. Sorry, that was never in the cards. But the markets reacted and they went down. So in my humble opinion, what you're looking at right now is markets that are tired, that are bored, that are full of people with short attention spans, and you might just be getting a decent opportunity here. And that's kind of the way I'm trying to look at it.
To which I would say, if you're feeling bored, fact check yourself, brother. Somebody pointed out that we should look at Charles Hoskinson's most recent tweet, and while I cannot do the screen share, my computer will cry. I will tell you that he said, guys, we just absorbed the biggest collective liquidation in crypto's history and came back pretty much like it was nothing. 2025 is about to be crypto's year. And the market is fickle, but that downward movement, if it really is concerning you, or the back and forth of a little up, a little down, a little up, a little down, if it's really concerning you, take a minute, take a seat, and possibly de-risk yourself, my friend. This is the time, especially if you're new, to just pay some attention. Like Alex says, if you're bored, if you're expecting that you'll buy a thing and it'll make you rich tomorrow, you're expecting the wrong thing. Your expectations, Alex, I would say their expectation really first and foremost should be to learn, because this is different than anything you've ever invested in before, for a couple of reasons. Technically, the precision of how you do it is different, and it's important to learn that because it'll make every decision you make down the line better. But also, it's different because the nature of these assets, since most of them are representing a startup company, most of them are pre-product, most of them have been funded by venture capitalists, they have these huge valuations, and their value it's not tied to like tangible real world products and services. It's tied entirely to speculation. So if the crypto czar had come out yesterday, busted his shirt open to reveal, Charles Hoskinson's face tattooed on his chest, Cardano would have absolutely ripped. It's not what to
temporarily,
expect.
and then it would have dumped into the ground.
Yeah, absolutely. It would have tanked like crazy, because everybody who missed selling it the last time it was up would have been like, now's my chance, baby, and gotten the hell out. So a lot of these companies, they don't have a product, they don't have services that tie their price tag to any kind of real world value in people's heads. It's just people making a market as they trade back and forth. But what other expectations would you set for our friends who might be new to crypto, might be wondering, is this a good price? Will it go up? Will it go down?
I think that we should all expect more downside. You should always plan for that. And if you go in with that in mind, it will help you, temper the amount of money that you invest. Because I think one thing that's really, really hard to figure out, especially when you're just being spoon-fed a whole bunch of nonsense about how this is up only and 2025 is going to be the biggest year in price action history and blah, blah, blah. You're very tempted to go in with more than you can actually afford to lose. And I genuinely believe that we will see more downside. That's the way that I'm looking at it. Because if I think about it this way, and I'm objective, remember, we're doing our best here to remain rational and not biased. So we don't want to be clouded by bias. It's true that we have a friendly administration to the industry coming in. You have a friendly Congress, and they seem to be interested in doing things. It's also true that Congress is slow as shit, and they're going to disappoint you, because that's kind of what Congress does. So I believe that this year, like what would be a great year in 2025 for crypto, does not just mean prices exploding. It means like, let's shore up the infrastructure layer here.
Yeah.
Let's get the idea that these big companies that would really like to expand into the US feel like they're comfortable and safe to do so. Let's work on bringing them here. Let's work on hosting more conferences in the United States. Right now, all of the biggest ones are outside of the US. Even Consensus this year is in Toronto. That's usually in Austin, Texas. So let's focus on that, and let's pay attention, because the other thing to remember is that right now, institutional money is actually coming into crypto in the form of BlackRock buying, MicroStrategy is always buying. But the other big ETF providers, if the SEC does manage to enable staking for the Ethereum ETFs this year, then more big institutions are probably going to add Ethereum to balance sheets. Jerome Powell just said in a meeting that the Fed doesn't care if banks want to do custody of crypto stuff and offer crypto services. He's cool with it, which was also good news. I think if you plan for this year price-wise to be a letdown or boring based on what everyone is talking about, but that we will be in a better place to build from and become more stable and perhaps a little bit less volatile. And, maybe we get some of this nonsense out of here and focus more on the big companies, the big stuff that's actually working and doing stuff and has a product and is able to generate some revenue, all of that. I feel way better about crypto as an institution, as an entity, as an industry with that in mind than I do just wondering how long it's going to be before my bags explode. And that informs how I'm buying. So,
that's right.
To take it to the question, what am I buying right now? Always Bitcoin, always little bit. If I don't feel like I have the confidence to buy something, I still make my dollar cost average investments every week. It just goes into USDC instead. And then the more volatile side that I'm working on doing a little bit of trading with is just Solana. So I bought some yesterday at 202. If it stays flat today, I might add another one. If it does the same thing tomorrow, I might add another one. I'm not going in heavy just because I kind of expect it to go back under 2, at least in the short term. And I'd like to be prepared for that. And then who knows? If it keeps going down lower than that, then opportunities to get more lower, and we keep long term. We keep looking long term,
Now, Alex, you just said a lot of things there that I think somebody who's new or maybe watching for the first time
probably
has absolutely no idea. So let's unpack some of that. I wanted to tell you what Alex said about USDC. What is USDC? USDC is a cryptocurrency token.
Good one.
And it is one of many such tokens called stable coins. And stable coins are cryptocurrency tokens that are backed by either assets or math that helps them stay tied to the price of a government currency like the dollar, like the euro. And these currencies, they can be used in all the same ways dollars or euros can be used, but they can do a couple of extra things too. And they're not as volatile, therefore, as cryptocurrencies like Bitcoin or Ethereum or Solana tend to be. And if you're just watching us for the first time, or even if you're figuring out what the heck do I buy, I want to encourage you to make your first cryptocurrency purchase a stablecoin. Because like Alex said, learning about what this stuff will be beyond the hype, beyond the currency, beyond what it could be as an investment for you, will ironically help make you a better investor. Because you'll start to understand, one, how to use this cryptocurrency. It'll give you confidence. It'll give you skills that will allow you to move more freely around the rest of the market, but also understand the rest of the industry. When somebody comes out with a slick investment opportunity for this new AI gaming decentralized metaverse thing that's the first of its kind, it's very fast, it's very cheap, it's only 5 cents. Wouldn't you like to buy 100 of them? You can say no, because you'll understand what blockchain will be, the problems it solves, and you'll see right through that crap. You'll be ahead of 99% of all people. So what I would encourage you to do, and I have a playlist for this in my profile, Alex talks about it all the time too, is to join an exchange, get a free account at a place like Kraken or Gemini or Binance or Coinbase, and fund it by connecting it to your bank or using a card, debit or credit card, to buy a little bit of a stable coin like USDC, US dollar token, pegged to the price of the dollar. And then that you learn how to transfer it to a crypto wallet, which is a different tool from an exchange. It allows you to see balances on a blockchain. It allows you to send and receive cryptocurrency tokens to your friends. And it makes it easy for you to interact with cryptocurrency assets that you own directly. Once you practice that, you can send it back to your exchange and practice turning your crypto back into cash. Great skills to have when the price of a cryptocurrency investment has gone way up and you need to know, how do I sell it? Or you want to feel like it's very safe. The best part about stablecoins is they can do everything other cryptocurrencies can do, including earn passive income for you. Judd asks, where do you guys hold USDC for the best return? I know Alex has his short list, but probably the simplest, easiest thing to do is, as you practice using an exchange like Coinbase, and many of them do this now, you can simply hold cryptocurrency in USDC to earn between 4 and 5% yield. But you might expect 6, 8, 10, even 12% on stable tokens in other places around the internet that you can learn about in 15 minutes. So what about you, Alex? What are some of your favorite places to hold USDC or other stable coins if you're trying to earn interest?
Well, so like it's been pointed out, Coinbase itself will pay you an interest rate for keeping USDC on the platform, whether that is just on your account. You just make a Coinbase account and get some USDC in your account. You'll immediately, without doing anything else, start earning 4.1% right now. Or there's a whole bunch of other places that you can go. So personally, I use Aave just because it's the biggest DeFi protocol, which we can come back to in a second.
And that's Aave, AAVE, right?
AAVE.com. Yeah. And
Beautiful.
it's a borrowing and lending service. So you can take out loans there, and you can also help supply the money that people borrow. And you can earn interest for doing that. And the reason I picked it is just because they're the biggest, meaning that there's the most money on that platform. Because you do have risks if you decide to do this. You have two risks primarily. For let's just take Aave for example.
Sure.
Supplying USDC for interest on Aave, you have two big risks. One, USDC could depeg and fail, and two, Aave the platform could go under. In crypto terms, as far as risk is concerned, those are unbelievably low risks comparatively. The odds of USDC failing are very low.
Yeah, it's globally adopted.
It is possible, but at this point, I mean, like Evan just pointed out, we just went through one of the biggest single event liquidation in the history of the industry, and USDC and Tether did not bat an eye. In fact, no stable coins that I'm aware of batted an eye.
No, and really quickly, let me just say these sometimes people worry about cryptocurrency because it's not real money, but USDC is a product offered by a company called Circle. I believe, aren't they owned directly, Alex, by Coinbase, or is it just a relationship? Yeah. And they have to comply with a ton of laws. Like they've been audited by lots of different companies. They are compliant in many different countries around the world. So like this is a very legitimate company that wants to do business. It's not, Alex and I show up in our hats with our cute little microphones and you're like, who the hell are these guys? Is this guy going to grant me a wish? No, this is like business people in suits who are named Larry and have pocket protectors. Like that's what you're dealing with here.
Yeah.
Not to knock your credibility. Also, Alex, can you go like this really quick? Just let me see it.
Oh, hey.
Damn, son.
Did we plan it? We'll never know. You will never know. Okay.
My mom thinks I work at Bitcoin. That's what it says for the people who can't read. They're like, what the hell does your shirt say? Anyway, sorry. Go ahead. So USDC, legitimate. Yeah. Tether, legitimate.
So, correct. Yeah, it's a good solid stable coin. It is not without risk, but to be very honest with you, the way that I always consider risk is, well, what am I risking by not doing it? And right now, if you're just holding raw dollars in your checking account, you're losing roughly 20 to 25% purchasing power every year as it stands, based on inflation, real inflation, and debasement of currency. So to me, holding dollars in my checking account is also a risk, especially if you're young, especially if you are not super well positioned with regards to saving for retirement and all of these things. Don't forget that you can be at any point in this journey, and there's no right answer, there's no wrong answer, there's just the answer that happens to be right for you wherever you are. So anyway, there was a couple of good questions just about this whole idea of yield. So it's true, you can earn interest on your USDC with Coinbase in the account there. But there's a ton of other options. So I'm going to share my screen here and make Evan do the thing
All right.
briefly to
Briefly.
show you one way that you can check this and get some options.
Oh man, good timing because I was going all the way up the nose with that one. Hold
All right,
tight.
so this is a website that you truly need to become familiar with.
Yeah, take a screenshot.
Yeah, this is DeFi Llama, and there is an absolute treasure trove of information on this website. I could not recommend it more highly, and to be very honest with you, the fact that this entire website is not only free, but you do not even need to make an account to use every single piece of it is absolutely insane. I don't know how they're doing it.
Shout out
but-
DeFi Llama.
but
You
by
the
God,
real
they are.
heroes.
So there's a tremendous amount of data that you can look up here, and honestly, I would recommend just taking a seat and like poking through it and just reading one thing off of this website every day. If you're brand new and you have no idea what you're looking at, just pick a page and look at it and try to figure out what it's talking about. Look up some of the terms that you are not familiar with. Take some of those jargon words that you're not familiar with and Google them, ChatGPT them, get the definitions, come back, keep reading.
And somebody said this in
So-
the comments. We need office hours for this website, but the way to do this is to play along with your friends. Get in the
Mhm.
Discord, and when you're reading this, come back and say, "What is a fork?" Or come back
Yep.
and say, "What is Tron?"
Or literally,
And so on.
literally just come to office hours on Fridays. and
Or
ask
literally
questions.
just come to office hours on
We-
Friday. We'll
we
tell you
do
about that. in a
actually have
second.
office hours on Fridays.
Yeah, that's right.
Okay. And they're free, by the way. All right.
Totally.
So anyway, one of the things that you can do, one of the many things that you can do on DeFi Llama is you can compare yield on anything. So we're going to come down here on the side here. Oh, there we go.
There you
I went
go.
Right past it. Yields. Okay. So we need to do a little bit of filtering because there's a lot here. As you can see, TikTok, I'm not sure if you can tell there.
Yep.
This
I
is
can.
currently tracking 17,069 different yield pools over 460 protocols on 99 different blockchains. So
Really
there's some
quickly, let me
options.
pause there to say when people hear about blockchain, sometimes they think the blockchain. Blockchain is a word used to refer to a type of ledger that makes cryptocurrency possible, but it's also a word we use to refer to many different networks that are built that way, like the Bitcoin network, like the Ethereum network, like the Solana network. These are different chains. 99 chains supported. Those are what we're referring to, different blockchain networks. You have different blockchain networks, just like you have different cities for many different purposes. They evolve, with the language, the culture, the architecture over time to do different things for people.
So what we need to do is narrow our search down a little bit. So we're talking about USDC. So let's just search right here in the search bar for USDC. Come on, there we go. And we're looking for this top one here, just standard USDC. Now, don't let yourself get overwhelmed or distracted too soon here with all of these other USDCs. We're not worried about those right now. We're just focused on the main one, and we can go into these later. But for right now, they're not important. So, okay, this significantly drops it down. So from 17,000, but we still have 2,277 different pools that we have options for. So you can see here, these are ranked by size. And by size here, I'm talking about an acronym, a good acronym to start with. TVL stands for Total Value Locked. It's a measurement of how much money is currently on or in the ecosystem or the protocol or the project that we're looking at. So if this very first line here is for Aave, that DeFi protocol that we were talking about, and protocol is this basically just it's a project, it's a program, it's a place where you can go to do DeFi stuff, decentralized finance. They have $998.39 million TVL, which means that if you add up all of the assets that are on Aave, on Ethereum, which is one of the blockchains, it is the biggest one. There's just about $1 billion of money sitting there doing all sorts of different stuff. So right now, TVL is a little bit down. It's 4.82% on Aave, which is
APY.
actually APY, sorry, is
Gotcha.
one of the lowest that I've actually ever seen. And if you look at this, they give you a little chart here where you can kind of track what it's been. You can see that it is dropping right now.
And APY stands for annual percentage yield. Say that 5 times fast. Meaning
Yeah.
the amount of money you can expect to earn a return in a year. If you have $100 parked in this fund, you can expect to earn $4.82. And that might fluctuate like Alex showed us over time. But that's
Yep.
a pretty low rate for Aave, I would say.
Yes. However, one of the things that we can see here, just the reason for that is because of a massive influx of stablecoins to the platform over the past month. Not even. So if you look at, so remember we just said the total value locked right here on Aave here is 98.
Yeah. Sorry, no, it's okay.
I thought it opened in the same tab. There we go. So the TVL right now is about $1 billion. I've noticed here they do have a little ranking system.
I love when
now,
they
which
do
is
that.
Really nice.
Sometimes they also will say if there's a significant unlock right on this page, they'll be like, hey, by the way, they're unlocking 3% of their supply tomorrow or something like
Yeah.
that. Very cool.
I see a couple questions about Compound. Hold that thought. We'll get there in just a second.
Also,
So-
can I just say, did you notice that 48% APY on CBBTC USDC? I was like, dang, might have to check that out.
Yeah, no, we'll look at a couple of those. 'cause
Weird
it's really
aside,
tiny.
but stay with us.
So over
saying
here,
it so I don't
Evan,
forget it.
If you pan over
Where?
just a little bit to the end of the chart here,
Oh, I was looking at
Over
your
the side.
mouse.
under the ghoul. Okay.
I'm
so
with you. You
TVL
got it.
right here, January 18th, 2025. So just a couple weeks ago, TVL was 300 million. $600 million of ETH has been moved to Aave in the last couple weeks. So
That's a
of
lot.
course, as more and more people are using these things, the interest rate does drop. This is why it pays to pay attention and keep some here all the time, in my opinion, because like if you look over here, look how little yield there, look how little money there was on the platform. There's a lot fewer people supplying, which means that the demand for your lending is higher, which means that they can pay you a higher rate. APY over here, December last year spiked
41%.
huge.
Wild.
very briefly for just a couple days, and then it fell back down. So there's a big spike to try to incentivize some people to put money on chain with Aave, and as you can see here, it led to a pretty solid spike in TVL as well. And then we've kind of just been growing ever since. APY is evening out, but there you go. So that's kind of how to use DeFi Llama as a tool to analyze one of these different charts or one of these different protocols. I do really like the way that they lay this out. This isn't sponsored by DeFi Llama. It should be, but it's not. So anyway, tons of stuff down here. Everything is a link. You can always click out and explore stuff. Like Evan pointed out, though, there are lots of other...
Are you going to screen share again?
Yes,
Because if you are, I'm just going to keep it here and let you see my beautiful face like this.
that's fair enough. Evanception.
And I do want to say, since I was looking at a higher APY, I was looking at that GMX V2 perp. This is a pool down here. It says WBTC USD. That means there are two assets in this pool, USDC. Sorry, that's the one we were talking about earlier, that stablecoin. And the fact that it's got a hyphen connecting it to WBTC means that this is a liquidity pool where in order to earn yield, you have to deposit two different assets. And they will cover a range. Like as they range in price, you can earn a return based on how many people swap back and forth between those two tokens. That is literally the service that companies like Aave are providing, if you're curious. A bank or an exchange in our traditional finance world is open 9 to 5, and they charge a fee to keep your money safe or to lend you money or to make it possible for you to loan your money, that kind of thing. And they have employees and they have overhead and they have physical money they got to put in a very expensive vault. And so they give you a very small cut. But Aave has computer code protocols, like Alex said, that does all those things automatically the way your calculator does math, because the money is digital tokenized money. It doesn't physically exist. It only exists on a ledger called a blockchain. Very secure. And therefore, the reassigning of who owns this money, which account does it live in, it can be done by a computer code. And when people swap their money back and forth, it requires some energy, and the facilitation of that service, it is compensated by a fee. It's not like a business that says, I'm going to sell this to you for $2 of profit. It's like a, based on the rate of energy kind of fee. But the people who facilitate the service, like you putting up your money for people to move back and forth, you earn a big cut, a bigger cut than if a bank was there doing it in the middle. Just to zoom in on it.
Yeah, and I do recommend, before you put money anywhere, before you actually try to start buying things and moving stuff around, because the deeper into these things, and like looking at this one, I'll tell you right now, this is a much more complicated process. It's a riskier process than the first one that we were talking about. There's kind of no limit to like how intricate this stuff can get. It can either be very simple or it can be very complicated. It really just depends kind of how far you want to take it. So I don't recommend,
Oh my God, yeah.
Going from 0 to 100 on day one. That's usually where you make a mistake and lose a bunch of money. But when you're talking about just starting with some of these big ones, we've got Aave, we've mentioned. There's other big ones. Compound is another big one that I've seen mentioned in the comments. I would definitely go check that one out. Morpho has been getting a lot of attention lately. They've got some good lending options. A couple of the natural questions that I hear
Damn it. Wrong.
as we ask about this stuff too is, okay, so what am I really doing here? Why is Aave paying me? Simply, Aave gives out loans. You can go to Aave and you can take out a loan. And just like if you take a loan from a bank, they will charge you an interest rate for taking out that loan that you have to pay back. That loan is not governed by a bunch of people. It's governed and managed by code, by computer code, something called a smart contract. So if you sign up and agree to take out that loan and you agree to pay the interest rate, you have to supply some collateral to prove that you're, allowed to take out this loan. And in that sense, then you're agreeing to the terms of this contract. You can't just change your mind and decide like, oh, well, never mind, I don't want to pay for it. They can come after me in court if they dare, or whatever. That's not an option. The code will enforce the terms of the loan if you decide to change your mind. So that's one of the big benefits here. And then 2, they have to get the money that they're loaning out from somewhere. And for the record, this is what banks do. This is how banks do it. They just fractionalize it, charge a high interest rate, and don't give any of it to you. They keep it for themselves. Maybe if you're lucky, they give you a little nibble, but it's not much. So if you put your USDC, for example, on Aave, you are putting it into a pool that allows Aave to loan it out. And that's why you earn the interest that you do. Now, a couple specifics about it. You are paid every single day. Aave pays you every single day. A little tiny drip. So what's really nice here is that you have the opportunity to earn compounding interest through this platform, but your overall balance is increasing daily instead of once a month or once a quarter or once a week or whatever. Every day they drip a little bit more. So every day the balance gets just a little bit bigger, a little bit bigger, a little bit bigger, but you're always still earning that same APY, which grows and grows and grows and grows. So that compound is a lot more rapid with daily drip payments, which is also just another nice little DeFi feature that is not uncommon.
I got 2 more for you that people may not have considered, which is a lot of these protocols, excuse me, they have their own tokens. Aave has its own token. Morpho, which you saw on the list, has its own token. And they just generated these. They need users of their protocols to have them. They want them to. And these tokens have a liquid price. So it's easy if I'm, say, Morpho, to take what a borrower is paying me and relay a percentage of it onto you and then sprinkle some of my tokens on top essentially for free. But because they have a liquid market value, that actually increases your net APY. You'll notice a lot of these pools, they have extra or boosts, or some of the APY will be USDC or whatever asset you are lending. And then some of it will be in the platform's native token, especially if it's like a higher yield on a stable asset. That's often how they're able to do it. Then also, Alex mentioned if somebody is liquidated, the liquidated assets can be used to kind of boost up those things, but there are fees. If you get liquidated, there's a fee. If you are swapping in and out of a pool that this DeFi protocol facilitates liquidity for, meaning like they've just got a pot of money that people can, turn their dollars into Bitcoin and their Bitcoin into dollars, there is a small fee on that too. So they might share that fee with you. Most of them do. And then a lot of these have treasuries. Aave has a treasury. It has extra yield strategies where, just like your bank, it might stake a portion of deposits in a protocol like Lido or something like that. And that's where the risk comes into. If the rewards are totally inflationary, if they're not tied to any actual utility, people lending and borrowing, that kind of thing, swapping, people paying fees, they're probably not sustainable. Somebody asked that earlier, Alex, about like these high APYs, do they last? And we've touched on that. You saw Alex shared it in the graph, but usually speaking, when there is a very high APY, 100% or 500% or 1,000% or something like that, either the token itself is hyperinflationary, meaning there's so many of them and they're going down in price, or there's just like no money in the pool. And if you think, oh man, I'm going to put my whole savings account in this, and you deposit $10,000, well, there might be $10,002 in the pool. And then everybody else in the pool pulls the money out, and now there's only $1,000 in it, and you can't withdraw your $10,000. And nobody wants to pump it up again because the token is worthless. I see that happen a lot. People get wrecked that way. So just be cautious, and do let us know at any point if you have. This is a really, like Alex said, a deep topic that we can make as simple or complex as you would like. And if you do want a tutorial, office hours would really be a great place for it. We do that every Friday. And while you write your questions, that's my pitch. Jump in the Discord server. It's totally free. Anybody can come and listen to office hours in the voice chat. If you want to speak, you can sign up for a free premium membership trial. It's $9.99 a month or $19.99 a month to become a Premium Plus member. And membership prices are going to go up soon. So get in while you can, start a free trial, and then cancel it if you don't like it. But that's just one of the perks, is you can come to office hours and ask your question. It's like a coaching session with us, totally free, voice to voice. And honestly, it's a lot of fun. So check that out. Alex, what are we getting in the questions? Where do you want to take this thing?
There's a bunch.
As I finish coughing.
No worries. So couple quick things. Evan, do you know if Morpho pays daily?
Yeah, Morpho pays moment to moment, I do believe.
Okay.
It's compounding continually all the time.
Marinade as well. I'm not positive.
Except
but
for
I
their
believe-
extra rewards. You got to claim their extra rewards, like the Morpho token APY. You got to claim, I think that the epochs are 3 to 7 days. It'll be in their documents. You can Google Morpho Docs or Ask GPT.
Okay. Yeah.
Good
And
question.
I haven't used, I haven't messed with marinades yet, so I'm not sure if that's on my short list. I'm not sure if they pay daily as well, but you'll find that's most of them. Most of them pay pretty frequently. There was a couple really good questions here. Let me just scroll up really quickly. Is it safe, or can you lose money? It's possible to lose money if you're just using stable coins on one of these things to earn interest. The risk, however, is exponentially lower than holding a volatile cryptocurrency. And even there, it's, there's all sorts of different things you can do to elevate or lower your risk as you do this sort of stuff. I think that DeFi Llama's little dashboard where they add, the different things that go into their consideration for what makes a platform safe or not, or risky, is pretty good. But that's kind of one of those things that you just sort of have to be aware of and then decide whether you want to stomach or not. And like I said, I always consider the alternative too. If I do nothing with my money, investing is a risk, of course. But if I do nothing with my money and I just let it sit there, I'm just letting it inflate and debase away forever. So,
Yeah.
I'm not super stoked about that either. Hold on. Evan.
Compound is more user friendly. I think that's an important thing, is to find an interface that works well for you. Go ahead, Al.
Yeah. No, I'm gonna have to change my light here because I'm about to get washed out by this big ass window again. hold on. Okay, so there's a couple good ones here. What is the difference between Aave V3, V1, etc.? They're basically just like app upgrades. The difference is that people have money in these things and they can't just like shut it down, so they let them keep running, but they recommend that you move over to the newest version.
Are these lives available, Alex, after we're done for people to watch when they're over?
Yeah.
Where
For
do you
sure.
find them?
We have a wonderful YouTube channel. There are people watching us right there, right now. In fact, if you search up the Rise Up Morning Show on YouTube, you will find us, and you can subscribe over there. And I will say, I love TikTok dearly. It is our original home and first platform. But the show looks a little nicer on YouTube because you get the big screen. You get unless you're really into Evan's shaky phone rear camera screen share, which I wouldn't blame you.
Yeah, it's a great
APY
place, and we have playlists.
We do.
Go ahead.
APY varies. It does. It changes day to day. It depends how much money is coming in or going out of the platform. The more money is on the platform, the lower the rate usually because they are paying a lot more people. And if it fluctuates with supply and demand, right? So right now on Aave, for example, there's a lot more supply than there was 2 weeks ago, but the demand for taking out loans has not increased to match the new supply. So they still pay you, it's just a little bit less. There's a good one about.
Oh, go ahead.
What information do you have to share with the protocol to use it? That's kind of the nice part about decentralized finance. You don't. So there's no credit check. There's no like interview process. This is kind of the magic of a blockchain. You either have the money or the funds or the tokens in your wallet to do the thing that you say, or you don't. That's the only thing that the protocol cares about. It doesn't care about whether you've had trouble with it before or whether you have been a fantastic creditor before. That no one cares about that. The point is, can you do the thing you are requesting to do right now? And that's kind of where it stops. So you have a software wallet like Phantom or the Coinbase wallet or something. That's it. That's all you need. If you've got the USDC in your wallet, they will take it and they will pay you interest. They don't need to ask you any other questions.
And just on that note, how you might think about getting to that place, because a lot of people, if you sign up for a Coinbase account or a Kraken account or a Robinhood account, if you use an exchange, which is probably the easiest way to turn dollars into crypto, then you're going to have to give them some information. You're going to have to give them your name, your ID. You're going to have to tell them where you live because they have a lot of laws to comply with. In fact, some of them even insure your money like a bank does. And that's why they have to do these things. However, if you wanted to buy crypto with, say, a credit card, you could use a site like MoonPay. You could use a site like, I think even Plaid does cryptocurrency. Google how to buy crypto with card. If you don't have a credit card, you can even use an ATM to buy Bitcoin. The fee will be higher. And then use a decentralized exchange like Uniswap to turn your Bitcoin into stable coins and start using them on the internet. It is a couple more steps. It is beyond the scope of this live to show you a tutorial how to do it, but it is not something prohibitive. You can Google it and find a tutorial for how to do that, or you can ask us in the Discord and we can definitely help you.
Really good question about, I just want to make sure everyone hears it, about rates for borrowing. If you're trying to take out a loan, do they use Fed rate? No, they do not. So there's, the standard going, Federal Reserve set interest rate, the one that we are all glued to all the time, monitoring and hearing what old J-Powell is going to do. The difference here, because no, you're not borrowing at that interest rate, whatever it is, 4 point whatever percent. It's higher. However, the trade-off here is kind of the DeFi thing that we were talking about before. There's no credit check. There's none of this. Everyone is treated equally. If you have the money in your account to do the thing, if you can collateralize the loan, you get the same rate as anyone else. So it's higher than Fed rate, but it's usually significantly lower than predatory credit card rates. Yeah. And so borrowing from a platform like this, instead of taking on credit card debt, is often significantly better. And as we know, those credit card rates are way worse for people who have poor credit history or who do not have a long, credit report, or who maybe have had trouble in the past, regardless of where they are now. All of that kind of stuff can influence like how exorbitant the rates are that credit cards would charge you, and that doesn't exist in DeFi. So you're paying higher than Fed rate, but everyone gets the same.
Well, and the cool thing about it is it's not a closed system. So, like, if you are discriminated against or censored, you want to take your money elsewhere, you can, and you can fulfill the service of arbitraging. You know, maybe this bank that doesn't exist in your country has a lower rate for this currency than that one, and you can't access it. Well, if you've got the internet, you can go to any DeFi protocol you want, and you can borrow money for 2% over here and then lend it for 7% over here. And that kind of thing is the work that replaces those intermediaries. You do that. You are the bank. You are the money lender. There are lots of different opportunities. As you learn these things, you can get creative with it. And like Alex said, it goes as deep as you want it to. Alex, yesterday I was on Curve. You been on Curve Finance in a minute?
It's been a minute.
My God, let me tell you, don't go back there. I was looking at pools with 4 different stable coins I had never heard of, and the buttons. I didn't know how to do it, and I'm not exactly like a level 5 DeFi user.
Yeah, that's level 5.
That's level Jeff the Dunker DeFi, and I was like, listen, no, thank you. So it's okay if something is not for you. You don't have to even be as deep as Alex and I are into this stuff to start using
that's
it.
The thing that I want to impress upon people. Like, I've been here for a really long time, and I've read a ton, and I know all the terms, and I know how these things work. I do not like use the super risky stuff. I'm like pretty conservative. I hold like 4 things in my portfolio, and one of those is USDC. And I just use Aave because I trust it, and I've been there for a while, and it's really easy. It's literally just connect, hit supply, pick the amount, approve, done. Pay me every day. And then I trade. I sell some crypto when the markets are really green, and when it's really red, I think about buying some more. If you're curious, I just posted like a 7.5 minute video yesterday that basically just walks through that entire like thought process of like how to navigate the market. It's a pretty good one, and I'm turning it into a PDF guide that the Premium and Premium Plus Discord people will get for free. I should have that finished today or tomorrow.
Yeah, it's a good video. I watched it. I will vouch for it. And I do want to take a second to say, if you like this kind of content, you want to learn more, you want to spend more time on a live with us, and I certainly want to spend more time on a live with all of you, join us tonight, 7 p.m. And in fact, every Wednesday at 7 p.m. Central Time. We go live for Rise Up After Dark. If the morning show is like helpful news, commentary, answers to your crypto questions, Rise Up After Dark is meant to, 1, show you what it's like to do your own crypto research. Honestly, we do a lot of stuff like this. People in our Discord submit projects or companies that they're interested in learning about and hearing our opinions on. And then Will, our friend, Alex, and I just run through to test these things out. We poke around their websites and we give you our honest opinions and feedback. We use tools like DeFi Llama and show you how to, as people say, do your own research. But tonight, the other thing we do is we have conversations with expert guests. I am so excited, Alex, to talk to Amy. I am Amy Street on all platforms. I know you're watching the show right now, Amy, and we love you so much. We're so grateful to the just stars for aligning and bringing you to us. She is going to join us for the conversation. Solana beyond the memes. A lot of people say, what's Solana good for? All they do is meme tokens. They do so much, okay? So much. Seriously, you got to check it out. Fact check yourself, brother. It's going to be a great conversation, and it goes live at 7 p.m. Central Time tonight, or wherever you would like to watch it on YouTube after the fact. Check out the Rise Up After Dark playlist and get ready. It's going to be a good conversation. So what else we got, brother?
Really good question here from Alina, who's asking if supplying is the same thing as staking, and it is not.
Good question.
It is not the same thing.
What is
a difference?
Staking? Sounds tasty.
So staking is a very specific. So the reason that they might be easily confused, because as far as you're concerned, from the user perspective, you are submitting crypto to something and earning interest in return. So in that sense, they function the same way from your perspective, but on the back end, they're very different. So when you're supplying USDC on something like Aave, like I said, that USDC is being used to loan out to people trying to take out loans, and you're being paid for the service, just like a bank. Staking, no one is borrowing that money that you're staking, that you're committing. You are basically dedicating that amount of crypto. You're committing it. You're offering it in service to the blockchain that it happens to live on. So let's just use Ethereum as an example. The Ethereum blockchain has a native cryptocurrency called Ether. And in order for the Ethereum blockchain to work, people need to stake Ether with it. And in return for you allowing the blockchain to use your Ether to function, they will pay you interest. And that interest is earned in Ether. So you earn more ETH on top of your ETH, just like how if you supply USDC on Aave, you will earn your rewards in USDC added directly into that account. There are lots of different service providers that can facilitate staking for people if you're interested. It totally depends on the blockchain. On Ethereum, there's huge protocols like Lido where there are billions of dollars staked, earning interest. Or there on Solana, there are lots of different staking service providers. There's Helios, there's Marinade. There are different ways that you can stake. There's a whole bunch of different things. But at the end of the day, the big difference, when you're supplying loan collateral or loan supply, you are letting a lending protocol do the thing with the money and pay you for the service. And if you're staking, you are supporting the function of the blockchain you're using and earning a reward for doing so.
So we got some good questions to follow up on this about staking. The first one is there any greater risk to staking than there is to lending? And the answer really is it depends. Depends on the token you're staking, how robust that network is. It depends on the protocol you're using. If they're paying you $1 billion trillion APY, it's probably a lot riskier than some sort of protocol that's paying you a more stable yield. And how you would determine that is by looking through their documents for things like third-party audits. You would look through their documents for things like, what are they doing with the money to generate that yield? Are they, leveraging it and doing all this other stuff? Are they wrapping it in synthetic assets that they're lending out and borrowing and doing this and doing that? Generally speaking, the more directly you are connected to the activity that generates the yield, the safer it is. Those people that Alex were talking about, those stakers that validate the network, if you're using a protocol like Lido, you're one step removed. The purest form of staking is if you have a validator node that participates in the work of writing transactions to the blockchain, earning fees. And the second purest is probably if you contribute directly to a validator node or indirectly through a protocol like Lido, because not everybody meets the criteria. They don't have a computer that's big enough, has enough data, fast enough. They don't have the required amount of money to put it by themselves. They call it staking because, you got to put up a stake. Like Alex said, in Ethereum, it's a lot of money, $100,000 or so. I don't have that kind of money to just throw around. So there is also a lockup period sometimes. With lending, often you can withdraw your money anytime there's liquidity. And sometimes that's true for staking too. But many staking protocols have a period of time that they rely on you to commit your stake for. If you unstake, there's usually a button that says unstake. You often have to wait a day or 7 days or sometimes up to 30 days or more before the tokens are back in your account.
But
not
that's
a cause
also
for concern, but
no, and you can see that before you start. It's that unlock period is public information on every blockchain, so you can look it up. Polkadot has a 28-day unlocking period. Let's see. Actually, Solana does not have. If you're staking natively, like in Phantom with any of those things, there's no unlock period, which is really nice.
That is nice.
I don't know all the rest of them off the top of my head, but I know Polkadot's the big Mac Daddy of unlock times.
Dude, seriously. I was surprised to see, after we talked to Marinade the other day, I was surprised to see that they have a lot of staking that you can just snap right out of. It's very liquid, very quick. I love it. They're a Solana staking provider. We had another question here that while Alex wrangles his dogs, I want to talk about a little bit. Somebody asked, these centralized exchanges, places like Coinbase, Robinhood, in the past in the crypto space, we've run into some real problems when we trusted them too much. Some examples that you may have heard of include Mount Gox, Celsius, Voyager, and most recently, most famously, FTX. Companies that either collapsed because their business practices were shady, not secure, or otherwise stable. So somebody asked, what can we do? How can people see these collapses coming? And how can they avoid this risk? Alex, we're talking about centralized exchange collapse, Voyager, Celsius, FTX. How can people see these collapses coming, and how can they avoid this risk? And the honest answer is that anybody can see what happens on a blockchain, but a lot of these companies, they don't put every single thing on a blockchain. So we really do rely on them, on their auditors, to do a little bit of what they say they're going to do. It's not pure crypto in the sense that you do have to trust somebody. But there are a couple of things that I would say you could do, and I'm sure Alex could add too. The first one is one we've already been talking about: high, unbelievable, too good to be true yields. There is probably something happening if the yield is, 10, 20, 30% on a stable coin that is much higher than normal market rates. This is a telltale sign for Celsius, for example. Often the yield was coming from risky lending, from leveraged bets, or outright Ponzi schemes. There's also a lack of transparency on their reserves. This happened with FTX, with Celsius, with Voyager. They refused to show you like what was in their treasury, and there were no independent audits of how they were using customer funds. That should scare you. And then they had a lot of like other little issues, withdrawal issues, maintenance delays. And I would say if you want to protect yourself from that, the absolute easiest and best way is to practice self-custody. You should learn how to use your own self-custody wallet to securely store your crypto so that you don't have to keep it on an exchange where they hold it for you at the discretion of their terms and conditions. Until you do this, you might consider spreading the risk across multiple platforms. Maybe you have a Coinbase account and a Kraken account, but you should definitely learn self-custody. Do you have other thoughts about like what's risky and how to avoid it when it comes to exchanges like that, Alex? Maybe on-chain reserves. Does anybody come to mind who has the reserves on-chain? You know, that you can like look at it. That would be cool. I honestly don't know.
I would definitely look for, people with heightened transparency. Yeah, I mean, post FTX, a lot more attention was put onto that. I think it's demanded of more exchanges. They all fell under more scrutiny because that shook the trust in the entire idea of a centralized exchange. To be very honest with you, I have my favorites. I have my preferred ones. I would never say that they're like unequivocally 100% good to go, and I don't keep any money on them for like long term. If I'm like actively using it or actively trading in and out of something, I might keep it on an exchange for like a little bit if I wanted to have like quicker access to cash it out back to my bank. But in general, I buy and it's immediately out of there. It's immediately to a hot wallet. And there was a question, like safest hot wallet, anti-hacker. Every single hot wallet is as safe as you make it. You can have terrible internet security. You can have terrible password management. You can leave, you can take a screenshot of your seed phrase and leave it on your laptop and then leave it at the library or whatever. And then the safest thing is completely open.
Yeah.
They are all basically as safe as you make them. And there's a few like big tried and true solid platforms that, don't typically have issues. But on the back end too, they are all just as easily attacked if someone really wanted to go after one. And I'm sure that people try all the time. So, for me, if I was trying to think of like who is managing a wallet that I just know has like good security, Kraken has a hot wallet, and the Kraken security team is kind of famous for being beasts. They're the ones that broke
pretty great
back years ago when Trezor, which is a cold wallet brand, when they were doing security testing and they had like bounty programs out for people to try to break stuff and fiddle with things as they were building. The Kraken team is the one that cracked Trezor. So
that's so cool.
Yeah.
What a bunch of nerds.
What
a bunch of nerds. We had a really good question here. But first, a comment from my very good friend Jay Pill, who says, for the people on TikTok who cannot see it, I should have went with my gut and bought fart coin. Great dad joke. Can I get a point? Not only can you get a point, but went with your gut to buy fart coin. That's a knee slapper right there. Thank
That's a
you
good
very
one.
much for the dad joke. Evan and Alex Parsa asks, how does off-market trading, or you may have heard it referred to as OTC trading work, that big institutions
question.
engage in?
Oh, yeah.
What do you say about that, Alex? Sounds like a shady backroom deal.
Actually, you know what's really funny is that's the way it was meant to happen. Like
Okay.
when Satoshi built Bitcoin, it was supposed to be peer-to-peer, and for the most part, we like implemented Web3, and then it was the whole like value pitch, the sales pitch to get people to crypto was like no middleman, and then immediately a bunch of multi-billion-dollar middlemen companies launched, and we all use them every single day, all the time for everything. So, in my humble opinion, peer-to-peer trading is what we were supposed to be doing from day one. But when you hear the phrase or the acronym OTC, over the counter, it is almost always in the context of some huge company like a Michael Saylor does not buy his Bitcoin on Coinbase. He buys it over the counter, OTC.
Dude, but could you imagine?
I know.
Coinbase would open a physical branch just for Michael Saylor where he could walk in and be like, evening, boys.
He wouldn't need to. He would, exactly. They would build him a building and staff it fully with employees that are only there for the day when Michael Saylor walks in and slaps $500 million on the table.
For people who don't know, MicroStrategy is Michael Saylor's company whose sole purpose is to buy Bitcoin. And to wit, they have done well. They have a lot of Bitcoin. Go ahead.
So anyway, the OTC basically just means they're going off the market to buy it. It means that they are buying Bitcoin from someone specifically. They're making a deal with someone who has Bitcoin in exchange for money that they have. So if Evan had a Bitcoin and I really wanted to buy one and he wanted to sell one, I could just pay Evan for his Bitcoin and he could send it to me. We could do that. That would be an over-the-counter purchase because it's not affecting the spot markets. It's not a market buy. The one thing that I always hear, so people do these big over-the-counter buys so that they don't directly influence the markets. They don't directly impact price. However, price is impacted by proximity just because those big over-the-counter purchases are always blast all over social media and then people react to them. So, if someone made a huge over-the-counter sell, whatever, it might affect the market down. If someone made a big buy, it might affect the market up. It might, call into question, whatever. OTC is, it's just it's the way that it's the way that the gajillionaires do it. But really anybody can.
Yeah, and some
Although
services
usually you have to
facilitate
qualify. Yeah, like Binance and Coinbase, they all have OTC desks, but you have to qualify for those, and they're only for whales.
Yeah, you that's like the most secure end of it, and they're really providing services for high net worth individuals. If you want to buy OTC on Craigslist, I honestly would just say don't do it.
And that's just bullshit.
Like that's probably not a good thing. Don't trust people like that.
Yeah.
We had a couple of questions here too on this side. I heard that that is how Will buys his Bitcoin. J Pill says he has thousands. If that's the case, then Will, you're really holding out on us. We're ready for you to invite us to your yacht house.
This is a gross misrepresentation of the
Somebody
facts.
asked about River yesterday for daily Bitcoin purchases. This is a great example to plug a lot of automatic solutions that we have in crypto. River is one, Strike is one. Many protocols have a function where you can connect a bank or a card and give them permission to take some money at a regular schedule and then purchase cryptocurrency with it. They make it easy for you to do. And I recommend for investors specifically that this kind of set it and forget it approach, make sure, one, that you hit your targets to acquire stuff. You're not going to forget it. And also, it can make you feel like you're doing a good thing without having to be like in it every day, buying it, selling it, trading it. Wow, that's an easy way to lose money. But if you just want to invest by accumulating something over time, I use river.com. I have a little affiliate link at our website. You don't have to use it, but it's a great way. They have 0 fees on recurring buys, withdrawals. I have it set up to take a little money from my bank every week, and every single day it buys the same amount of Bitcoin. It is easy to set up. It is cheaper than Coinbase. And then I just transfer it to my cold storage wallet about one time a month. It's pretty great. What's my take about FLR and AIXBT? I don't know what is the take between them, and I'm not sure what FLR is. Is that Flare token you're talking about? I didn't know it was in the same category. AIXBT is an interesting sort of Twitter bot that has its own token and can trade tokens. It's okay, but it can lie to you. Welcome back, Alex. And I expect AI agents in the future are going to have to do much more novel things. They will help us do all kinds of things online, but for now, they mostly are reply guys on Twitter. And I don't think attaching a crypto token to that makes it particularly special. We have a couple of questions here, Alex. Can I rapid fire them with you?
Yep, let's do it.
Okay, great. What about Caleb and Brown? Have you heard about this custody solution?
Never heard of it.
Okay, then good. This is an opportunity for me to do a commercial. Caleb and Brown is a legitimate company, but there are a lot of people who push Caleb and Brown to go ahead and do a Google search on it. They will approach you and say things like, you need to get on Caleb and Brown because it's quantum resistant, or there's going to be an upgrade, or what. They will use fear or doubt or something like that to make you feel like you need to use a service that they provide you. And often what they are providing you is in fact a scam. Caleb and Brown, it's an exchange like Coinbase or anything, but the people who approach you in a DM, or if you click a bad link online that looks like Caleb and Brown, but it's not, and they start saying, oh, you got to get this wallet, don't use that one, use this one, do it now, send us your money, we'll invest it for you. Anything like that is a scam. A lot of people will impersonate creators like us, legitimate companies like Caleb and Brown, to leverage the trust they've built to take your money. Always watch out for those things. Yeah, and I don't have any thoughts on Flare. I don't know if you do, Alex, but that's, it's in the same bucket. A lot of people will use it to try and scam people who don't know any better, saying, claim this airdrop, click this link. It's a bad link.
I would just
Don't
ignore it. It's
do it.
nothing. You're not missing anything if you just ignore that stuff.
Yeah. Alex, one of our favorite questions is about profit taking. Can you please explain the best way, or at least one good way you might think about taking profits? This person said, do you just wait for a 2x, wait for a 3x?
Yeah.
What would you say?
I think if you get a 2 or a 3x, you should definitely consider taking out initials or taking profit for sure. But I would not wait for a 2 to 3x to take out profits. This is one of those things that you can train the reflexes to take profits and to buy dips, kind of like you would train any skill. It's muscle memory. I find that it is actually very, very difficult to try to put into words how you should approach the whole thing. But the best I can do is to say, you're looking in the markets for pumps in the price that feel unsustainable. That's where I look most heavily to take profits. So, for example, look at the markets right now. If someone announced some piece of news that everyone was just super excited about and everything pumped 20%, I would sell heavily into that, because it's a news-driven event that impacted the price to the upside quickly in what I would call unsustainable. So even though it's not a 2x, it's not a 3x, it's just 20%. It's 20% on one day when there is one single event that drove that price move. I'm taking profit on that day. On Sunday, last Sunday, there was, a series of different things. There was a news-driven crash based on tariff announcements and the potential trade war and all these sorts of things that caused lots of stock market fear. And, crypto went through a huge liquidation. It was a very red, bloody day. Harder to recover from, but also single event driven, compounded by the fact that we've had a few rough weeks before that. I bought on that dip because that crash, 30% down in one day, felt unsustainable. But from that bottom, then, as soon as it had recovered another 20%, I took profits again. And that's the way that I try to navigate this stuff. You just kind of, and you can scale the percentages that you buy or sell with based on your confidence in the move that you're making. So if you're not too sure, don't buy heavily and don't sell heavily. If you're very, unsure about the whole thing, just sell or buy with 5 or 10%. There's nothing wrong with that. But if you feel really confident about something, then kick that number up. It's a really hard thing to talk about succinctly because there's so much that goes into it. I don't know what your financial situation is. I don't know what your time horizon is. I don't know what you're invested in. I don't need to know. I don't know how much money is a lot of money to you. I don't know how much money you have invested. I don't know how underwater you are on other things. I don't know how long, you have until you need this money to pay bills or survive, whatever. I don't know any of that shit. So it's irresponsible for me to say just like buy and sell when the markets go up or down. Maybe you have invested so smart and you have like a aged long time horizon and you don't give a shit about what happens this week. You're looking at this on a yearly scale. Then, maybe everything I just said means nothing to you. So it really depends on you. There's no right or wrong answer. There's just the answer that's right for you.
It's a good way to say it.
But I would definitely consider taking, especially if you're entering the market now, you're entering at a much riskier time because a lot of stuff is significantly up from where it was a year ago. And we don't know where we are in the cycle. There's a ton of disagreement about it, whether we've already topped or whether there's more bull market still to come, or whether there's a blow off top coming, or whether it's up only all of 2025, or whether the bear market started 2 weeks ago. No one knows, and everyone is guessing. So
fact check yourself, brother.
Just keep your options open and be agile.
So Alex, I know you got to go in just a second, and I'm going to wrap it up with just a few rapid fire questions for folks here, but I would love to give you the opportunity to give us a final thought, a question, suggestion, a good joke, a word of wisdom, an extra dog if you've got some lying around before you ride your other dogs and pony off into the sunset.
No, I think feeling relatively well met. I've got some notes to try to get some more videos out today. I'm very excited for tonight. So if you have any questions about anything Solana related, tonight is definitely the night while we have Amy on the show. We're going to dig into a whole bunch of different stuff. She just texted me to confirm that she's good to go. So super excited. Yeah, I think tonight's gonna be a really good show. I'm very excited for it.
Bullish. Cool. Well, thank you, my friend, for hanging out. Obviously, hang out with me until you got to go. I'm just going to wrap up a couple of threads, and then I'm getting out of here too because I got to go to therapy, man. Before
Sounds
I get
good.
Before
I got to get on the road, so I'm going to go. But I will see all of you guys in Discord throughout the day. If you need anything, feel free to tag with questions. If you're not in the Discord, there is a plug. Join the Discord. What are you doing? It's free to join. It's free to ask questions. Just please be aware that the second you join, you're going to start receiving DMs from scammers. Unfortunately, people are aware that our Discord is for beginners primarily, and they target it more heavily, and they've got some really annoying tricks up their sleeves that are very, very hard for me to combat. So please, 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 on social media or in Discord, do not respond to any DMs that you receive. I don't care if it looks like it's from me or looks like it's from Evan. It's not. It's from someone pretending to be us. They will do whatever they can to gain your confidence and your trust and string you along until they finally try to hit you with some sort of a scam attempt. If you receive any DM that you did not specifically ask for, it's a scam. And the only way you will ever actually end up in DMs with me or Evan is if in public you ask for a DM and we in public confirm that we will send you a friend request.
That's right.
But even then, just don't, there's nothing good happens in DMs. You don't need them. Okay, just ignore your DMs. I wish that I could force block every DM from everyone's inbox all the time. Just turn them off.
Yeah.
They're always scams. All right. I appreciate all of you for hanging out. I will see all of you in the Discord and tonight on After Dark.
I will absolutely die on this hill.
Ladies and gentlemen, Mr. Alex Popovich, thank you so much, brother. We'll catch you soon. Couple of quick rapid fire questions and a chance for you to screenshot the Discord link if you haven't already. Somebody asked, hey, is it a good idea to use XLM or Lobster Wallet to avoid high gas fees? The answer is yes. There are many cryptocurrency networks that make it possible for you to pay very cheap fees. Every cryptocurrency network incurs a fee to you every time you interact with the blockchain. When you transfer your assets, when you sell them, when you receive them, when you swap them, that kind of thing, all of it requires that you interact with the blockchain ledger. Anytime the blockchain, meaning that network of computers that are updating this ledger we all share, have to do some work, you got to pay the piper. It's not an extractive fee. There's not like a CEO making a lot of money and that's why you got to pay it. It's because of the energy required, the resources. That's why we call it a gas fee, because there is some energy consumed. It's not like, necessarily gas powered turning a crank, but that's what they call it. You can avoid gas fees by using fast, cheap networks. For example, the Ethereum mainnet is not cheap. It is cheaper than it once was because it consumes less energy than it once did. But it is still more expensive to use Ethereum than it is to use a network we call a layer 2 built on top of Ethereum that might bundle transactions up into a group and submit them as one. Or to use a network like XLM or Solana or the Near protocol, which has infrastructure that makes it a little cheaper or a little faster. And there are lots of options. But not every token you want to trade is available on every blockchain network. Not every app you want to use or every game you want to play is available on every blockchain network. So the most important thing is to make sure that you do your research before you get into the thing. See which networks, tokens, wallets, exchanges are compatible with the stuff that you want to use. And I have other videos that go a little more thoroughly into gas fees in my profile, or you can come back and ask us on a future Web3 101 Wednesday. We can definitely talk about it. And I do want to say to KBD, thank you very much for the questions. I don't know that we have any episodes on Cardano specifically. We don't do a ton of episodes on specific chains, though we tend to talk about them here and there. My thoughts on Cardano are, boy, it's a network. Sure is. They have a tough to learn programming language that not a lot of people feel incentivized to learn, called Haskell. It's divisive. Some people love it. Some people hate it. A lot of people don't want to learn it. They have ambitious visions to bank the unbanked in places like Africa, the whole continent. And they have raised a lot of money and been around a long time. And as a result, they're on the front page of the internet. When people come to crypto for the first time and see that Bitcoin is $100,000 a token, they fall subject, they become susceptible to a fallacy. They think that's too expensive. They don't realize you don't have to buy a whole Bitcoin. They look for something cheaper. They see Cardano on the front page of the internet in the top 10 tokens, and they say, I'll buy that. It's 99 cents. I'll buy that. If it goes up, I'll be rich. That kind of thing. I don't think Cardano is doing as many exciting things for the average consumer right now. There aren't as many apps, experiences, products, and services being built there as there are on, say, Solana or Base Network. Does that mean that it's not a valuable part of our blockchain story? No, of course not. Charles Hoskinson, the founder, is previously a co-founder of Ethereum. He's outspoken. He's an advocate for our space. And I do think it's got enough money that it's certainly going to be around the next bear market. So we'll see what they build. As long as you're here, there's time. Yes, Joseph, that is in fact unit bias. So last minute questions, suggestions, good jokes, words of wisdom before I go off to therapy. Amsfar said, this is my therapy. And honestly, I have to tell you, it certainly does feel good to get together every morning. So my friends, we're here Monday through Thursday, 7 a.m. Central Standard Time to answer your questions. We're going to be live tonight for Rise Up After Dark at 7 p.m. to talk about Solana Beyond the Memes. And I want you to jump into the free Rise Up Discord server at discord.gg/riseup. The last thought for me is going to be from my friend Tish, who asks, what are 5 things somebody should learn before they get into crypto? You ready for this one? The first thing you should learn before you get into crypto is what blockchain is and why it matters. Get a little perspective on the history of the internet, because that's what cryptocurrency actually is. It's just the next evolution of the internet. Great places to learn about this are from my teacher, Chris Dixon. He wrote a book called Read, Write, Own. If you Google his name, Chris, spelled like Chris with a CH, and Dixon, spelled like it sounds, you can find him on many different podcasts speaking very clearly about Web 1, Web 2, Web 3, where blockchain fits, what it actually is, what it might be good for, and how people are using it right now today. That conversation alone, any of them, is going to put you ahead of like 99% of all people who are just buying stuff because they hope it'll go up. It will make you a better investor if that's all you care about, and it will help you to understand why this stuff might actually matter. So that's number 1. I would say numbers 2 through 4 are, you need to learn, you ready for this? I'm going to do 2 through 4 because that was 1. How to buy and sell send, receive, store your crypto securely and turn it back into cash. I have a playlist in my profile called Learn to Use Crypto, where the first 3 videos are tutorials outlining step by step how to do that. And then number 5, if you have questions, the best, most important thing you can do, and I'm telling you this not just because I have a Discord community, but I have a Discord community because this is true. The best, fastest, cheapest, safest way to learn crypto is to get in a group chat of some kind, to get in a room of other people who already know how to use it. And you want to make sure the culture is good. Okay. I would not recommend that you spend money. Some people think the more money you spend on the subscription or the community or the thing, the better it is. That's really not the case in my experience. And I've experienced a lot of crypto communities. You want to go someplace that is free to start because there are lots of options. You want to go someplace the culture is good, where it's inclusive of people like you, whether you're, black, white, young, old, gay, straight, whether you speak English or something else, whether you've been using this stuff for a minute or a million years, you feel welcome to ask a question. People meet you where you are. They're not trying to sell you a particular investment. Oh, we're all going to buy this token. It's going to be great. And they're not going to make you feel stupid for asking a question. Okay. We have created the Rise Up Discord community for just such a purpose. And it is one of the best communities on the internet. It's housed in the Discord app. It's a new app to some people, and it can be a bit of a learning curve, but we've got lots of tutorials to help you. We're very friendly. And as our friend Ali says, we have cookies. So come for free, stay, play, learn with everybody. We'd love to see you there. I have a step-by-step tutorial video right at the top of my profile that shows you how to get there, and the link is on screen, discord.gg/riseup. I often say, we got everything. The only thing missing is you. So, my friends, thank you for being the best part of what we do. Really, truly. I'll be back. Alex will be back, and we'll have Will too for our interview with Amy Street tonight at 7 p.m. Central Standard Time. You can catch the replay of this episode and everything else at the Rise Up Morning Show on YouTube, and be sure to check out all the other resources on the riseupmorningshow.com. My God, Evan, this is a long commercial, but that's it. That's all the time we have. I got to go. I got to get out of here. I love you. I'm grateful to you. Everybody stay safe, be well, and until next time, my friends.